Welcome to Global Tax Talks. I'm Will Morris, and I'm here in Shanghai, China, where I'm joined by Jeff Wang, who's our China tax markets leader. Jeff, welcome.
Thanks, Will.
Great to have you here. So can you share some of the recent developments in China in terms of tax policy changes and the outlook for the next 1 to 3 years, and how should international MNCs be thinking about dealing with these changes?
Sure. Thanks, Will. China's tax policy has remained stable in recent years, but several key changes are on the horizon. First, the VAT on the cross-border service offerings. Those transactions that starting from January 1st, 2026, China new VAT law will apply destination principal rules. So meaning the service's intangible asset will be taxed if consumed in China or sold by the domestic entity. However, the implementation details on consumption within China are still evolving, like many things in China. So business need to stay informed. That's the first. And second is about shifting government investment incentives. And as many of you know, local governments can no longer offer physical subsidies to ties to the tax contributions. Instead, support will focus on capital, services, and business-friendly environments, which is a bit more vague. So multinationals should review any existing incentives that negotiated with the government to understand the potential impacts. And the last is a consumption tax reform. The tax collection will shift from the production imports to the wholesale and retail. This is going to be particularly impacting our RNC sector clients, with a portion of the revenue allocated to local governments. With that reform expected to accelerate in 2025, business should assess how this might affect their cost structures, and pricing strategies as well.
Great. Yeah, and I mean, one of the interesting things, you mentioned VAT a couple of times in that. Obviously, in one of President Trump's executive orders, he calls out VAT as potentially being a non-reciprocal tax. So more to come on that anyway, sure. But that's probably not to speculate on right here. So in your role as the China tax market leader and as the APAC transfer pricing leader, based on your observation, what are the sentiments of MNCs in Asia about the current tax environment? And again, you know, what actions should MNCs be taking?
Thanks, Will. I think a client in this sector are really more in tune to know what's happening around the world versus in the past, they're more focused on the domestic regulations and impacts. Right now, they understand the world impacts, the dynamics, the global politics, as well as how their business should evolve. So they're focusing more significantly on the impact of business models and in financial planning to stay ahead. The multinational generally are like we talk about the year becoming more celebrity here because they're very much focused on the tax policy changes around the world and updates themselves on that and assess the impact. And second, they conduct more scenario plannings to adjust their business models and strategies as much as they can. And third, of course, is engage more with tax authorities to secure the certainties. So we are getting more engaged with the clients about creating that certainties, not just for China, but also bilateral, trilateral perspective, multilateral perspective in such an uncertain world.
Yeah.
Yeah, and then I think the last probably more focus on is we talk about the supply chain and how the companies are adapting and changing their supply chain so they can respond to the environment more promptly and quickly and effectively.
Yeah, yeah. No, this is definitely a very uncertain environment in which businesses live, and trying to pin down what we can is important, while also, I think, understanding that there is going to be some level of uncertainty with which we are going to have to live. So,
yes. I think to a certain extent, the Chinese multinational, which is an outbound multinational, are behaving very similarly with the inbound multinationals, which means they're more in tune with what's going on around the world. They're looking very carefully about how they conduct their business around the world and supply chains and what have you. And then also trying to figure out what's the best business model in terms of anticipating all these frequent changes around the world.
Good. Great. Well, Jeff, look, thank you very much for joining me, and I will look forward to talking to you again soon, I hope.
Thank you.
Good. And thank you for joining us, and come back again next time so that you stay global tax ready.